Welcome to Markets Now. I'm Michelle Broke with Randy Martinson Ag. We're seeing mostly lower grain trade this morning with livestock futures. Well, we've been mixed and two-sided in the cattle. We're lower in the hogs. And Randy, let's start off talking about the soybeans. It looks like we still have report hangover from yesterday. How low do we have to go to price in a 560 million bushel ending stocks figure? It's been a while since we've had one that high.
It has been, and I think you look back, I think it's 2019 that we had when the stocks were this big the last time. And, at that point, it looked like about a 935 is what hopefully will catch this market. But that seems to be the level that they're going to be looking to trade down to. And yeah, it was a pretty big surprise as far as the market is concerned to see USDA come in and increase acres when everybody else was going the other direction. Turned out to be quite a bit bearish for beans. And yeah, this market needs to go down a little bit more. Nice thing is, it is encouraging some demand as we had another export sale this morning.
I saw that, but can you stimulate more here at these levels? Do you think China is going to come in and see this as a value?
Boy, we hope so. I mean, right now that's what's going to have to happen to see this market turn around. We've got big supplies. The only way we can, get our way through this is to see exports or see demand pick up. It's not likely we're going to see it domestically, as we're already pushing crush to about the max as we can. So it's going to have to be in the export market, and that's the one that's got room to move a little bit too.
Yeah, I mean, we get so fixated on the supply side of things yesterday in the report, but obviously USDA is projecting that demand needs to pick up here in addition. The other thing, we're down at new lows, but some of this is coming from crop conditions and the forecast, isn't it?
It is. That's adding to it, which makes it look like we could possibly see even yields increase even more, because we are looking at the central and eastern corn belt continuing to have almost ideal growing conditions. They're talking about the inch of rain coming in for the next 5 days across most of the corn belt, Iowa, and the west, well, the entire corn belt. So that certainly is going to take away any issue as far as threatening weather. August is the most important time for beans. And right now, in the first 2 weeks, we've had good weather. Now we're starting to see a little bit of a warm up, which should help the crop finish and start to dry down.
Okay. And if I missed it, I'm sorry, but how low do you think soybeans are going to go here?
I'm thinking that we could possibly see them go down to that 935 level. I didn't think we could break 10, but with this report, it was obvious we had to. Now I don't know if we can break 9. I mean, that's a pretty big move when you look at from our highs for the year to where we're at now. This market has lost quite a bit of ground, and it's tough to see it expand much more than that.
Now, corn is down as well this morning. And of course, we had a nice bullish key reversal there yesterday with a little bit of constructive news in the report. But corn can't go up if soybeans are going down, right?
It can't. And that same weather that's helping to bring some negative into the soybeans is also bringing it into the corn, as most of that is, gone through silking. The northern plains still have some issues. North Dakota, Minnesota, South Dakota, Wisconsin still have some pollination to go through. And it's going to be tough to see this crop make it all the way to maturity right now with the way the weather has been. But you look at the corn belt and you're looking at a monster crop coming into play. And that's really what everybody's fixated on.
They are, but 225 bushels per acre record yield in Illinois, that seems pretty lofty even for them.
It does. I mean, you keep hearing about the good that, you don't hear much about the bad in Illinois right now, but they are talking about some pretty good crop there. I mean, and it's going to take that. I mean, I think, right now you look at the Western Corn Belt and the Northern Plains, we've got a lot of corn that probably isn't going to make it, just because of how late it was planted, because it's not pollinating. It's basically fall and winter is going to come a little too soon for that crop.
I also want to talk about what happened with acreage in the report. USDA lowered harvested acres over 700,000 on corn, but we also got FSA prevent plant numbers after it was at noon, I believe. And so talk about, were those incorporated in or not?
I don't think they were. I mean, maybe some of it was. I mean, just because, USDA has always been looking at a lower principal crop acreage. So some of the prevent plant was worked in. We have some every year that's worked into the market. I don't think all of it was. I mean, it came in to be larger than last year. I mean, over 2 million for corn. I don't think that much has worked into the corn number, because when you look at from what's planted to what's being harvested, those levels are a little bit higher than what I would expect, especially in the North Dakota, Minnesota, South Dakota, Iowa area. So I do think that maybe a third of those acres have worked in, not all of them. And I don't think all the drowned out acres have been worked in either.
No. So when will USDA rectify that? In September, October, or when?
Well, September's their next one that they're going to look at acres, and I would expect a little bit more of the drowned outs and the prevent plant to come into play in the September report. All of it probably really won't be baked in until January.
Gotcha. So corn, 2.67 million acres of prevent plant, total 3.8 million. That's actually above last year. Is that right for the total?
It's above last year's level, yes. I think last year we were at just a little bit over 2 million, or 3.6 million, I think it was last year. So, yeah, we are a little bit above. Yeah, 3.8 this year, total 3.6 last year. So a little bit above last year's.
And what about wheat? That was kind of where we saw one of the major changes in terms of the balance sheets was lower acreage on wheat. And talk about what USDA did there yesterday in the report.
They lowered, which was a surprise, the winter wheat acreage a little bit, but that was all pretty much Texas is where they saw that drop come into play, where they dropped planted acres by 300,000, harvested by 200. But the bigger change came in the spring wheat, which, we kind of didn't think we were going to see that many spring wheat acres get planted. And, when we were looking at this in June, but they did lower spring wheat acres by 565, harvested acres dropped by 555,000. So, over 500,000 acres got dropped out of the spring wheat area.
And spring wheat production went down as a result. And I think a lot of folks were thinking it was going to go up, right?
Oh, most definitely. We've been, the wheat quality tour came with, record yields. USDA came with record yields last month, kind of following up behind it. And this time we actually saw the yields lowered. And I think part of that is because there's a little bit more disease pressure than what was anticipated.
Okay. So, we talked about how corn can't go up if soybeans are going down. Do you anticipate both corn and wheat futures will continue to see spillover pressure from the soybean market or not?
In the short term, yes. I mean, I would expect that, wheat is not going to be able to go very far because the demand picture hasn't improved much there. I mean, we're seeing a lot of tenders, but nothing coming to the U.S. other than routine. So if, you've got soybeans going lower, which is pulling corn, it's going to pull wheat with it as well. I think we could see a little bit of disparity between the classes, though, where Minneapolis might see a little bit more strength, especially if we continue to see some concerns as far as the yield because of disease pressure.
You also said, though, there are some quality concerns or some protein concerns, you told me.
Protein is coming in a little lower than anticipated up here as well, because when you see bigger production, and so we're seeing a little bit lower protein, and there are some elevators that have rejected some wheat just because the protein's too low.
Gotcha. We'll kind of end up here on the cattle market. We did try to rally initially this morning, and we've been having a tough time putting more than one day, more than one update together, because the funds are liquidating on any strength here now.
I think so. I mean, I think the funds are coming in and selling on every little rally. I think there's even some hedge pressure coming in on any kind of an increase. So, the sad, tough part is that, we're getting close to December's lows. And I think this market's going to try to test that before we possibly see a bottom. Hopefully that will stop this market and see a little bit of correction. But cash continues to still be $10 over where the futures are trading at. And that's another thing that should come in and help bring some underlying support.
Yeah, you would think there'd be some support as a result of that. But man, we're really concerned about recession, economy, demand overall, it seems like.
That is exactly what's driving it, is that we're really concerned that the recession is going to set in. We're going to cut back on our product, or, on consumption. Box beef prices have been going back and forth. So the big thing is, if we can see an interest rate drop in the September numbers or in the September Fed meeting, that might help a little bit. But we're also going into a seasonal where cattle seem to see a little bit of a downtrend once you get into late summer, early fall.
Yeah. And I don't think demand is really backed up here or backed off, but it sometimes is more about perception than reality. All right. Thanks so much for joining us. Randy Martinson with Martinson Ag, and that is Markets Now.